This is Nightly Business Report with Bill Griffith and Sue Herrera.
In the path, the winds pick up on the Carolina coast as local businesses close up shop and hope the disruptions won't last long.
How big is too big? The FTC is holding hearings to figure that out and eventually decide whether big tech needs more oversight.
Giving back, the world's richest man makes his biggest charitable donation ever at $2 billion. Those stories and more tonight on Nightly Business Report for Thursday, September 13th.
And we do bid you good evening, everybody, and welcome. It was a recipe for gains on Wall Street today. First, trade tensions continued to ease. Then, inflation concerns were tempered once again, and Apple shares recovered from yesterday's sell-off. You mix it all together, and stocks finished the session on the upside. The Dow Industrial Average advanced by 147 points today, back above 26,000. The Nasdaq added 59, led by Apple, and the S&P was up by 15.
But while stocks were higher today, an influential investor says the bull market is in its late innings, and he sold some of his stock holdings. Appaloosa Management's David Tepper called this a tricky market and cited the trade war with China in particular.
If we do the tariffs on China, that's going to make it a little bit tough on the market here just going forward. I don't know if that's an inning question or not an inning question, but it does get to valuations and where we should be if we put on a lot of tariffs. And I'm not saying we shouldn't or should, but I'm just making it factually that's the case. So I don't know how that's in the market. And the other thing, if we don't have it, then, we'll probably have, the question is how fast will the economy go? Because China is stimulating, and they're stimulating because I think the tariffs are coming. And so that might have the fact of pushing us over into higher interest rates. So it's kind of getting a little tricky at this point in time.
Tepper said stocks could drop 5 to 20% if trade tensions between the world's two largest economies increase.
Meantime, oil prices fell today amid talk that continued trade disputes could dent demand even as supply tightens. The International Energy Agency warned that global economic risks were mounting, especially in some key emerging economies. And at today's settlement, the price of domestic crude dropped by about 2.5%.
One of the most troubled of the emerging market economies for investors in recent months has been Turkey. And today, that country's central bank finally took some action by raising interest rates sharply. Hadley Gamble is in Istanbul tonight.
Another day of wild volatility for the Turkish lira following a highly anticipated central bank decision to raise rates, outstripped expectations, and immediately sent the country's currency lower by as much as 5%. The move wiped out earlier gains following comments from the country's president, where he slammed the central bank and called for a rate cut. It's just the latest in a tit-for-tat between the government and the central bank that has raised questions about monetary policy autonomy in a country where the currency has weakened 67% against the dollar year to date. With many economists now predicting that slowing growth could trigger a recession as early as next year, S&P now warns that the economy could shrink by as much as a third, the lowest level since 2006. And already, the drop in the lira has seen Turkey lose a third of its billionaires. Despite the latest moves to boost that confidence, international investors remain worried. After 15 years in office, President Erdogan has tightened his grip on power, appointing his son-in-law as Minister of Finance and himself as the chairman of the country's $200 billion plus sovereign wealth fund. And while many say that this rate rise is a move in the right direction, it may not be enough to stabilize the currency against the economic and geopolitical headwinds. For Nightly Business Report, I'm Hadley Gamble in Istanbul.
Here at home, investors are watching the track of Hurricane Florence and trying to figure out if the damage will be severe enough to impact the stock market. According to CFRA, during the most expensive storms, the S&P 500 fell by 0.2% the month after the hurricane was formed. The index was nearly 4% higher in the subsequent 3 months.
Hurricane Florence has begun lashing the Carolina coast. We have 2 reports for you tonight. Contessa Brewer is covering the preparations underway in Myrtle Beach, South Carolina. But we begin tonight with Jackie DeAngelis in the path of the storm in Carolina Beach, North Carolina.
The wind is picking up and the ocean waves are making their way up to the dunes, all ahead of the arrival of Hurricane Florence. The powerful Category 2 storm is expected to crash down on Wilmington, North Carolina tomorrow, with a storm surge of 10 to 15 feet, as well as up to 40 inches of rain. Flooding is the #1 safety concern as the residents, businesses, and authorities make their final preparations. So is the loss of power. Duke Energy has started to shut its Brunswick nuclear power plant, located about 4 miles from the coast. Storm surge in this area predicted at 13 feet. Duke also says 1 to 3 million of its 4 million customers in affected areas should brace for outages that could last days or weeks. As experienced in past storms, power outages that are long are extremely disruptive and dangerous.
Duke Energy and our electric co-ops are estimating power losses in the millions, and families need to have their emergency supplies ready.
While lives are the most valuable asset going into Florence, property damage will most certainly be surveyed after. Estimates suggest this storm could cost between $20 and $30 billion. CoreLogic says the total worst-case scenario could elevate that figure to $170 billion. For perspective, Hurricane Ike, which hit Texas 10 years ago today, was also a Category 2. It caused $40 billion in damage. The fear is palpable and the stakes are high.
There's nothing we can do here. When winds get above 3 digits, the only thing you can do inside your house is die. You can't do anything else. So why stay?
We are staying. We live on the Trent River and Trent Woods, and we're going to stay. And I think we can take up to 16 feet of water, so I think we'll be okay.
The storm was expected to cast a wide net, and once the outer bands arrive and the rain starts, it won't stop for days. For Nightly Business Report, Jackie DeAngelis, Carolina Beach, North Carolina.
And now to Contessa in Myrtle Beach.
Up and down the Carolina coastline, this is a scene that's repeated over and over. Flights canceled, empty ticket counters for people who have not yet evacuated ahead of the arrival of Hurricane Florence. They're running out of options.
We didn't realize the flight was canceled because we weren't notified. We already turned our rental vehicle in and we have no way to get out of here.
Terry and Ron Wetmore flew to Myrtle Beach for vacation last weekend, their first flight in 35 years. Now they're stuck and can't escape back to Pittsburgh.
Now what? You know, what am I going to do? What am I supposed to do here now? I don't have a vehicle. I don't have, nothing's open. I can't check in anywhere. It's, whatever.
As Hurricane Florence bears down on the South Carolina coastline, visitors and residents have limited options. With mandatory evacuation orders, many businesses have been closed for days. A Waffle House locked and boarded up is a rare sight. The company tweeted out a picture of its command center, and it has what's known as the Waffle House Index. Green, everything's open, plenty of food and electricity. Yellow, operating on limited supplies and generator power. Red, closed. It's a gauge even the federal government monitors in judging disaster recovery. Amy Leftis has owned the Pan American Pancake House for 35 years. She's been through her share of tough storms and is monitoring the approach of Hurricane Florence. She, like so many other business owners in Myrtle Beach, depend on the tourism dollars from nearly 19 million visitors who come annually.
Financially makes things very difficult for everyone, not just the business owners, but all the employees. They're not making a living either. So the evacuations definitely hurt the whole Myrtle Beach.
She says the decision to stay open gives her an opportunity with the locals. Many Publix stores stayed open until mid-afternoon for those picking up last-minute supplies, those intent on riding out the storm.
I am prepared to house people and 8 dogs for 6 to 8 weeks.
Shelters are open, but getting to them now is the challenge. The Wetmores got a lift with law enforcement and lucked out with a hotel room at the last minute. Forecasters are warning of dangerous flooding with long-lasting rainfall and a storm surge as high as 13 feet. And authorities insist now is the time to hunker down and brace for the impact of Hurricane Florence. In Myrtle Beach, South Carolina, I'm Contessa Brewer for Nightly Business Report.
Well, the threat of that hurricane has also caused some home builder stocks to fall. The concern is that catastrophic flooding could result in new home completions to be delayed to the fourth quarter from the third, and disruptions might also cause new order growth to slow in this current quarter. So as a result, shares of Pulte Group, D.R. Horton, and Toll Brothers, among others, were all lower in today's trading.
The number of Americans filing for unemployment benefits remains at its lowest level in nearly half a century. Initial claims dropped by 1,000 to a seasonally adjusted 204,000, providing more evidence that the labor market is at or near full employment.
And as we mentioned earlier in the program, a key inflation gauge rose less than expected in August. The Consumer Price Index increased just 0.2% last month. That followed that pullback in producer prices that we told you about yesterday. An increase in the cost of gas and rents were offset by declines in health care and apparel costs.
And even as the economy strengthens, the financial crisis that started 10 years ago remains fresh in investors' minds. And that means many are always on the lookout for the next crisis. And as Bob Pisani reports, it may come from an unexpected place.
Could a cyber attack be the cause of the next financial crisis? It's a big question. Imagine this. A criminal gang or a state actor hacks into a central bank or a custodial bank or a clearing system used to settle stock or bond or derivative trades. There's not many of these firms. They are systemically important. The operations of one or more of the firms are dramatically disrupted to the point that the services are shut down. Key data is damaged or destroyed. It's difficult to replicate the services these firms provide, so there's ripple effects in other financial services firms. This could happen. On Wednesday, the Depository Trust and Clearing Corporation, which provides clearing and settlement for U.S. financial firms, released a report saying cyber threats may become the single most important near-term threat to financial stability. That's pretty serious. You know, everybody agrees the next financial crisis is not going to come in the same form as the old one, but figuring out where it could come from, it's really hard. The credit guys say it's going to be caused by excessive debt. The regulators say it could happen if we weaken the regulatory powers too much. The traders say fragmented markets and the rise of passive investing could cause a crisis. Economists will talk about trade tensions and rising nationalism and the threats to long-standing international alliances like NATO or the European Union. That could cause a crisis. So who's right? Maybe they're all right, but a lot of people are taking this cyber attack as a very real possibility and a real problem for the financial system. A similar report, by the way, came out from the Office of Financial Research back in December, saying a large-scale cyber attack could disrupt financial networks, threatening the entire system and the broader economy. For Nightly Business Report, I'm Bob Pisani at the New York Stock Exchange.
Time to take a look now at some of today's upgrades and downgrades. We begin with Dow component Intel, which was upgraded to market perform from underperform at Northland Capital Markets. The analysts there cited the stock's more than 20% pullback from its most recent highs. Price target now is $46. That stock rose more than 1% to $45.57. Meanwhile, Snap was upgraded to hold from sell at Pivotal Research. The analyst cited the company's long-term potential, saying it outweighs some of the near-term risks we've been hearing about lately. That price target is $9, but that stock finished right around that level today at $9.35.
Wayfair was downgraded to neutral from buy at Bank of America Merrill Lynch. The analyst is forecasting a deceleration in growth and rising investment costs into next year. The price target is $160. The shares fell almost 1% to $148.04. Darden Restaurants saw its price target raised to $140 from $125 at Argus Research. The analyst says initiatives used at its Olive Garden brand can be implemented at its other specialty restaurants. The rating remains a buy. The stock was up just a fraction to $118.85.
Still ahead, the FDA calls vaping an epidemic. But what exactly is vaping? And Juul? Big tech has gotten the attention of the Federal Trade Commission. The agency is now holding a series of hearings to examine whether some well-known companies are in fact monopolies. And this comes as scrutiny from Washington grows. Julia Borston has more on that story for us tonight.
The Federal Trade Commission wants to take a look at whether changing technologies demand changing regulation. The FTC holding 2 days of hearings on competition and consumer protection in the 21st century.
Today, our most significant and difficult consumer protection issues often revolve around the use and abuse of technological capabilities.
A series of panels examining whether the tech giants are monopolies. Google with its dominance of search, Facebook with its 2 billion monthly users, and Amazon with its nearly $1 trillion market cap and transformation of the retail landscape. All these companies and their peers access to consumer data, raising questions about whether data privacy needs to be regulated differently.
Privacy is one aspect, and I think that's something the FTC wants to take a closer look at. I think, they've always revised their rules from time to time. This might be another moment that, they might clamp down. Look at what the EU has done with Google and Facebook, and the FTC might adopt similar rules or come closer to the way the EU has been thinking about privacy.
Today's hearings come just after the Internet Association, the lobbying organization that represents tech giants, including Google, Facebook, Amazon, and Microsoft, released suggestions for federal regulations around data privacy. In her testimony on Capitol Hill last week, Facebook COO Sheryl Sandberg saying she believes regulation is inevitable, but that she hopes it's done in a way that protects consumers while also enabling companies to continue to innovate and provide useful services to consumers.
The game now is just how much can they participate in that decision making? Where will their lobbyists be able to kind of get their way in to sort of help craft what those new rules will look like? They're going to accept it. The game is how much influence can they have over what these new rules look like.
It's not just the FTC and Congress taking a closer look. Attorney General Jeff Sessions is reportedly preparing an investigation into social media companies for censorship amid growing concern that the tech giants are biased against conservatives, though regulating impartiality has never been done. For Nightly Business Report, I'm Julia Borston in Los Angeles.
Walmart made a big push into e-commerce a couple of years ago when it purchased Jet.com. Now the world's largest retailer wants to remake the shopping site and shift its focus. Courtney Reagan explains.
Jet.com is getting a makeover. The site began as a low-cost retailer that allowed shoppers to pay with a debit card or waive returns to save money. While that's still part of the offering, it's no longer Jet's main message. 2 years after Walmart purchased the company for $3 billion, it's making a renewed push for younger, more affluent city shoppers.
We've refocused the business on the urban consumer, and it is a very customer-focused business that we're building. We know that there's an opportunity to build something that's very different from other people in other competitors in the city.
But reports suggest Jet's traffic is declining, increasing the need to turn the tide. To do that, Jet is adding products from popular brands like Nike. Customers will also be able to buy from local businesses like Orwasher's Bakery in New York City. And in the Big Apple, Jet.com is promising faster grocery delivery options, taking a direct aim at its competitors, Whole Foods, Target, and Fresh Direct. This allows Jet's parent company, Walmart, to reach city shoppers it otherwise wouldn't and get groceries delivered to them, an important part of Walmart's growth strategy.
Being part of the Walmart business gives us access to the scale, which helps us with pricing and for the products for consumers, and also the infrastructure that we have that sits behind the business.
The question remains whether Jet.com's redesign will help Walmart in its ongoing competition with Amazon. For Nightly Business Report, I'm Courtney Reagan.
Kroger's same-store sales rise less than expected, and that's where we begin tonight's Market Focus. The nation's largest supermarket operator blamed its overall revenue miss on the transition to new store layouts and a change in its product mix. Kroger did top profit estimates, but it did see its margins weaken as price cuts and higher freight costs pressured results. Kroger's shares were off nearly 10% today to $28.58. Hershey's is growing its snack portfolio. The maker of Reese's Peanut Butter Cups said that it was buying pirate brands from B&G Foods for more than $400 million. Under the deal, Hershey's will gain control over Pirate's Booty popcorn and Smart Puffs. Hershey's shares were up a fraction today to 106.60. Meanwhile, the New York Post is reporting that activist hedge fund H.G. Vora Capital has quietly amassed a stake in Caesars Entertainment with the intention of pushing the casino operator to sell itself. And if Caesars won't consider a sale, then the Post says H.G. Vora would at least like it to sell significant assets. Shares of Caesars rose nearly 1% today to $10.45.
Shares of Restoration Hardware spiked on news that the retailer's CEO bought nearly 8,000 RH shares, which translates to about $1 million worth of stock. RH shares finished up 3% to $135.28. After the bell, Sears reported a drop in same-store sales that improved from the previous quarter. The retailer initially planned to release results before the market opened, but then postponed. Sears says it is still seeking ways to return to profitability. Shares initially rose in after hours, but finished the regular day down 9% to $1.21. And also after the bell, Adobe said stronger sales in its creative and document cloud divisions helped its earnings beat expectations. The company also gave upbeat revenue guidance for the current quarter. Separately, CNBC is reporting that Adobe is in talks to buy a privately held cloud marketing software company in an effort to better compete with its rivals Microsoft and Oracle. The report said Adobe could pay upwards of $1.5 billion. Adobe shares were volatile in the after-hours session, but they finished the regular day up a fraction to $268.52.
Yesterday, we told you about the concerns the FDA has raised about the growing use of e-cigarettes by minors. And today, we're taking a closer look at Juul. This is the company that dominates this market with a valuation of about $16 billion. Aditi Roy has our report tonight.
It's sleek, stylish, and looks more like a USB device than a vaporizer. That's just one reason why e-cigarette company Juul is so popular among teens.
Juuls are one of the most popular products that we sell here.
I mean, at my college campus, it's really popular.
The FDA says teenage use of the product is so rampant, it's become an epidemic.
There's probably steps they could do to perhaps even shut down their online sites. I'm not sure they're going to be willing to do that, but we are willing to step in and remove these flavors from the market. We think that they're one element of what's making these products appealing to youth.
Juul is one of 5 e-cigarette companies that have been ordered by the FDA to submit plans in the next 2 months on how they're discouraging teenage use of their products. In a statement responding to the commissioner's remarks, the company says Juul is intended for current adult smokers only. We cannot be more emphatic on this point. No minor or non-nicotine user should ever try Juul. Its founders have said they started the company to get people to quit smoking.
But we had always intended to build this company around the idea of making cigarettes obsolete.
Colorful pods and flavors like mango and cream. Juul's users include non-cigarette smokers. Since the company spun off more than a year ago, its growth has skyrocketed. Juul now owns 72% of the market. Sales have increased 800% in the last year, and the company is now valued at more than $16 billion. But critics say the company's success rides on its youngest users. Its early, slick social media ads seem to target young people. Juul has since replaced those ads, but the craze among youth remains.
It's definitely more popular among the youth.
My nephew he's in junior high right
Silas?
now. Yeah. And he told me about Juul before I had to hear about Juul.
Are you serious?
Yeah. That's what kids are doing.
Unlike traditional cigarettes, e-cigarettes don't burn tobacco. Instead, they have cartridges filled with nicotine, making parents like Laura Bishop-Bass worry.
I have a 22-year-old daughter, and a lot of her friends are using these products, and I'm warning them that you're going to be addicted to this tobacco.
Experts tell us some of the side health effects of nicotine among youth include asthma, and there's evidence linking it to lung disease. The FDA says it will soon release data on the growing use of e-cigarettes among teenagers, and the agency could order companies to change their sales and marketing practices. For Nightly Business Report, I'm Aditi Roy, San Francisco.
Coming up, the world's richest man is spending billions to give back.
General Motors is recalling 1 million pickup trucks and SUVs that could suffer from a steering malfunction. The automaker has identified 30 crashes and 2 injuries that are connected to this defect. It says there have been no deaths, though. The recall covers certain Chevy Silverado 1500 and GMC 1500 pickups, as well as the Chevy Tahoe, Suburban, GMC Yukon, and Cadillac Escalades from the 2015 model year.
The CEO of Amazon is the world's richest man, and now he's announcing the creation of a multi-billion-dollar charitable fund and outlining his philanthropic plan. Robert Frank has more.
The world's richest man is giving away more of his money. Jeff Bezos and his wife Mackenzie are launching a new philanthropic fund called the Day One Fund with a $2 billion commitment. The fund, which Bezos announced on Twitter, will focus on two things: the homeless problem and education for preschoolers in need. In the announcement, Bezos said the Day One Families Fund will work with existing nonprofits that help homeless families, and it's modeled after the famous Mary's Place nonprofit in Seattle, where Bezos lives and which has a rising homeless problem. The Day One Academies Fund will launch and run scholarship Montessori-style preschools in underserved communities. Bezos wrote that he will use, quote, the same set of principles that have driven Amazon. The gift follows criticism about Bezos' fortune, now at $164 billion, compared with the low pay for some Amazon employees. And it comes after increased scrutiny of his philanthropy. He hasn't signed the giving pledge, and until this announcement, he had given away less than $170 million. This month, he announced a gift of $10 million to a super PAC that helps elect military vets to Congress. And last year, he gave $33 million to a scholarship fund for the Dreamers. Bezos solicited ideas on Twitter last summer for his philanthropy and tweeted, quote, "It fills me with gratitude and optimism to be part of a species so bent on self-improvement." For Nightly Business Report, I'm Robert Frank.
And that's it for us tonight. I'm Sue Herrera. Thanks for joining us.
I'm Bill Griffith. See you tomorrow.